As of this moment on Monday, April 27, 2026, Advanced Micro Devices, better known as AMD, is trading at $347.81 per share. The stock has seen a massive intraday surge, climbing over 13.9% in a single session, pushing its market capitalization toward a staggering $567 billion. This isn't just a minor fluctuation, it is a violent breakout that has sent the stock within striking distance of its 52-week high of $352.99. If you've been watching the semiconductor space, you know that the expectation for months was that AMD would play a permanent second fiddle to the giants of the industry, struggling to maintain its margins while competing on price. The reality we are seeing today is that AMD has effectively decoupled from that narrative, fueled by a structural shift in how server-grade processors are being valued in the current market. This sudden spike was triggered by a massive rating upgrade and a price target jump from 220 all the way to 375, a move that suggests the market was fundamentally underpricing the company's role in the next generation of autonomous systems. While most people look at AMD and think of gaming PCs or standard laptop chips, the smart focus right now is on the rapid deployment of agentic autonomous systems that require an immense amount of server-side power. When you use an online investing platform or check your Schwab Intelligent Portfolios, you are interacting with a layer of technology that increasingly relies on the very architecture AMD has been refining for years. The recent sentiment shift actually gained a massive boost from a surprising source, Intel's latest earnings report. Usually, when a competitor does well, it's a threat, but in this case, Intel's blowout results acted as a tailwind for AMD stock. It confirmed to institutional investors that the appetite for data center CPUs isn't just growing, it's accelerating at a pace that might soon outstrip the entire global supply chain. This is the curiosity loop the market is stuck in right now. Can AMD actually raise prices across its entire portfolio without losing market share? The current trading volume of over 81 million shares suggests that big players believe the answer is yes. However, we have to talk about the friction between the hype and the hard data. While the stock is flying, institutional activity shows some significant caution. Cathie Wood and ARK Investment Management recently made waves by offloading over 215,000 shares, a move valued at roughly $75 million. This happened right as the stock hit these new highs, signaling that some of the most aggressive growth investors are starting to take chips off the table. There is also the matter of internal sentiment. Over the last 3 months, we have seen over $63 million in shares sold by company insiders. Usually, when the people running the business are selling, while the retail crowd is buying on a Fidelity trading platform or a Robinhood app, it's a sign to pause and look at the valuation. At a price-to-earnings ratio sitting well above 130, AMD is currently trading at a massive premium compared to its 5-year median. The common ground most investors share is that AMD is a winner, but the contrarian view is that at these levels, the margin of safety has almost entirely evaporated. When you look at the recent daily swings, the volatility is palpable. Just a few weeks ago, the stock was hovering in the mid-200s, and the jump to nearly 350 has been relentless. This momentum is being driven by the data center segment, which saw a 34% year-over-year revenue increase in the most recent reports. This is where the real fight is happening. If you are using SoFi Invest or Interactive Brokers to manage your own individual brokerage, you've likely noticed that the semiconductor sector has become the primary engine for the broader market. But AMD's specific advantage lately has been its ability to bridge the gap between high-end specialized accelerators and general-purpose CPUs. They aren't just selling a single product, they are selling the backbone of modern computing infrastructure. Comment below how many shares of AMD stock you currently hold, or if you are waiting for a pullback before jumping in. The institutional activity is particularly interesting because it shows a divide. While some are selling, others are doubling down on the idea of Yada-scale infrastructure. AMD's recent highlights include the Helios rack scan platform and the new Instinct MI440X GPUs, which are designed specifically for enterprise-level autonomous tasks. These aren't the kind of chips you find in a home computer. These are the engines powering the cloud services and wealth management algorithms used by firms like Fidelity or SoFi. The business model has shifted from being a low-cost alternative to being a primary architect of high-performance computing. This is why the stock is reacting so violently to any news of increased demand. The expectation was that supply would catch up with demand by 2026, but the reality is that the complexity of new hardware is keeping supply chains incredibly tight, giving AMD significant pricing power. Looking back at the historical context, it's easy to forget that AMD spent years in the single digits. Its past performance is a testament to one of the most successful turnarounds in corporate history. The company designs digital semiconductors for everything from gaming consoles to the world's fastest supercomputers. In their last full-year report, they posted record operating income of nearly $3 billion, with gross margins climbing toward 57% on a non-GAAP basis. This kind of profitability was unheard of for AMD a decade ago. They have successfully moved from the value category into the premium category, which is why you see them appearing so frequently in Fidelity ETFs and other high-growth mutual funds. When you use investing sites to compare them to their peers, the growth rank is almost always at the top of the list, even if the valuation rank is at the bottom. Macroeconomic pressures are still the wild card here. Interest rates and global trade policies regarding high-end silicon continue to loom over the sector. Any sudden shift in legislation could disrupt the flow of these advanced chips, which would immediately impact the stock's momentum. For those using online investment tools or a Fidelity mobile app to track their portfolios, the risk isn't necessarily in the company's execution, but in the price you have to pay to own it. The upcoming earnings report on May 5th is going to be the next major catalyst. Analysts are projecting an earnings per share of $1.23, but given that AMD beat the last estimate by over 23%, the market is already baking in another significant beat. If they only meet expectations, the stock might actually see a sharp correction, because the reality would fail to exceed the incredibly high expectations investors have built up during this 70% run over the past month. In terms of the future outlook, the scenarios are polarized. In a bullish case, AMD continues to eat into the market share of its larger competitors, while successfully launching its next-gen Venice CPUs, potentially driving the stock past the $400 mark. This would be supported by more partnerships like the ones they recently announced with AWS and Cisco. On the bearish side, if the agentic trend turns out to be more hype than substance, or if enterprise spending cools down, the overvaluation could lead to a painful 20 or 30% retreat to align with historical averages. The tension between the growth story and the price tag is the defining characteristic of AMD right now. It is a high-conviction play for many, but one that requires a stomach for the kind of double-digit swings we saw today. Self-investing requires a level of discipline to not get swept up in the green candles of a 14% day. Whether you use a Robinhood trading platform or a professional interactive broker's account, the data suggests that while the company is stronger than it has ever been, the market is currently paying for years of future growth tway. This is the classic expectation versus reality trap. The company is performing at an elite level, but the market's expectation is that it will perform at a legendary level indefinitely. To summarize, AMD is currently navigating a period of unprecedented expansion, characterized by a massive $347.81 valuation and a recent intraday surge that has caught many off guard. The central insight here is that while the general public sees a chip AA, the institutions are starting to price in a foundational infrastructure provider for autonomous computing. We've seen the expectations of steady growth shattered by the reality of a massive structural demand increase, leading to the current price explosion. However, the contrast between aggressive retail buying and significant insider and institutional selling cannot be ignored. The reality of AMD's dominance is real, but the price of entry has reached a point where the risks are as large as the potential rewards. As we move toward the May earnings call, the market will be looking for more than just a beat. It will be looking for proof that this new valuation is the new baseline. Stay grounded in the data, keep an eye on the institutional flow, and remember that in a market driven by hype, the most valuable tool you have is a clear view of the underlying numbers. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.